Hello and welcome to another edition of Capital Market Live on Channels Television. I'm Willie Bong. Let's jump right in. Now let's check out how your stocks performed for this weekend. Joining me to drill down on this is Ayodeji Ajilore, investment professional, ARM Securities Limited. Always good to speak to you, Ayodeji. I think you have to unmute, Ayodeji. Could you unmute your mic, please?
Yeah. Can you hear me now?
I can hear you loud and clear.
All right. Thank you for having me once more.
Ayodeji, it's been a week and we've seen a flurry of earnings coming, and we've also seen the performance of the stock market. But let's just start off and just, go back a little bit and say 2 weeks ago, the NGX All-Share Index was at the 49,000 level. Now, just tell me, how fast was this crash to the 43,000 that we see it closing this week with?
I would just put it succinctly like that was very fast. I mean, just like a snap of a finger, that's how we've seen it go down. And then it's pretty much because of a lot of factors. But one prominent factor that has played a very key part of the whole downturn that we've seen recently is actually the selling activities that we saw on Airtel. Do not forget that at some point in the past, right, on this call, we've had reasons to discuss why Airtel was surging. And one of the things we drew that down to was the fact that it's dual listed, right? So pretty much it creates an avenue for investors who wants to leave the market, the Nigerian market, to exit, and then of course to enter here and then exit in other exchanges where it is listed. So pretty much the reverse is what we have seen with the case, and that was actually one of the key factors that led to the downturn we saw last week. Now, for this week, right, the story is more or less like a mixed kind of activity. And when I say mixed in this sense, I mean, for the first 3 days of the week, you would see that it seemed like the bulls were having the day, but eventually we saw flurries of earnings releases, which eventually translates to another kind of momentum in the market, whereby we saw the bears coming in the last 2 days of the trading week to particularly take the week.
Okay, so Ayodeji, why didn't that momentum last? You talked about the rally we saw in the first 3 days of the week, but why didn't we see that momentum carry on till the last 2 days of this week?
No, pretty much from where we stand here.
Seeing that the earnings came in and the earnings were quite good for some of the stocks, so the companies are released. So why didn't we see that momentum carry on?
One very important thing that we must do is to delineate the data and then make some sense out of it. Pretty much you will see that the tickers whose performances were good in the week, when you trace it back, even last week, for instance, the banking sector, right? We've seen them coming out, posting decent results. When you look at FVN Holdings for one, they grew gross earnings by about 26.5%, and then profit after tax grew by about 123.5%. And then there we have it. So when you look at this kind of data and you look at the fact that traction has been going towards most of these tickers even before now, look at Fidelity Bank, for instance, and you are seeing a profit after tax of 31.9%, gross earnings growth of 38.7%. You go to Zenith, you see similar scenarios playing out across all of these tickers. Then you understand, for one, that investors have actually been preempting those sectors that they think performances will be fair in. And then you will see the fact that last week, when everything was going down, the banking sector was still able to hold its head above the water. And then the same thing this week. Aside the banking sector and the industrial goods this week, all other sectors closed in the negative territory. So it pretty much speaks to the fact that investors are ahead of time, and then they start pricing in what is necessary. So at the point when some level of clarity came in the week, they have already done the bargain hunting that you would otherwise have expected them to do. Right, pretty much so much that what is left is perhaps to just reshuffle portfolio position and then exit tickers that cannot or that seem not to have the wherewithal, particularly, let me put it that way now, to give them the kind of returns they want, perhaps in dividend payment or in capital appreciation.
Okay, so we're talking about earnings. It did rain this week. We saw a lot of them. So let's talk about them now. You talked about investors bargain hunting and selling off stocks that they felt was not going to yield them high dividend. Airtel Africa, for one, recorded a low profit after tax this that's the half year of 2023. How would you rate Airtel Africa's performance against the half year 2022? We're seeing that it's almost unchanged. The profit after tax is almost unchanged, but it was in a negative. And earnings, however, we saw earnings per share rise by 3.9%. Can you tell us more about that?
I think in this case, right, pretty much when you look at Airtel, you ordinarily, I would advise that you do not look at the financials just alone. I would advise that you draw back a little bit and then look at the macroeconomic environment in which the business is currently operating. Don't forget, right, from where we stand currently, Airtel runs in about 14 African countries as we speak. But the point for them is the operational issues that you see in the Nigerian environment is not peculiar to just the Nigerian environment. It's the same. Cost challenges have been a thing. And then when you see that revenue particularly grew. They grew ARPU, which is average revenue per users. They grew, they recorded growth in the number of subscribers on most of their products. But the point still remains that the growth is not at the level that we've seen it in recent years, particularly in recent quarters. So pretty much, when you combine the fact that there exist operational challenges, and then the operational environment is not showing any sign of improvement, and then when you match this to the reality, which is the fact that the growth in top line is not particularly that steep, it makes sense to see a slowdown in profit after tax. Of course, it's not a negative position.
Okay.
But, hello?
No, go ahead. Go ahead.
So now, when you now want to arch the data a little bit further, you will see that it will seem like the EPS improved from 7.6 cents to about 7.9 cents. That is pretty much on the part of the extraordinarily operational activities in terms of income now that they reported in the period. So pretty much for Airtel, it is more or less like the environment is not so good, but this business have proven over time, the telcos have proven over time to have the needed resilience to particularly confront the apparent headwind that is the case globally.
Zeroing in on the banking sector, we see FBN Holdings and Zenith Bank releasing also this week, and we saw FBN Holdings having a profit after tax increase about 123.5%. That's a massive jump from what we saw in 2021. How did FBN Holdings, I know that a lot of things are happening for that bank at the moment, but Zenith Bank was just, the profit after tax just grew by 8.6%. I know they're dealing with the same macroeconomic headwinds, but how was FBN Holdings able to, scale above the cost, push inflation, supply constraints that they're facing right now, and probably liquidity tightness in the system to be able to have this massive, impressive performance that they put out there?
Pretty much. I think when we look at this data still, it is important that we state clearly that where the two businesses are coming from is quite different, right? I mean, we have FBN Holdings that are coming from a place that is particularly low in terms of the profit base. For instance, if you look at just this 9M in 2021, you will notice that we have about 40 billion in profit after tax for FBN, and then this year you have 91.3 billion. But when you compare to the likes of Zenith Bank, GT Bank, you will see that they have a much higher base. And that's pretty much because FBN is just sorting a lot of things. Don't forget that there were issues at some point with regards to NPL, with regards to capital adequacy. The business has been improving, no doubt. Yeah. So pretty much the fact that the base is lower for them in terms of profitability, it puts this in context. It's not particularly, it's a very good performance, no doubt, but it's not particularly saying that others are not going. It just pretty much means that FBN is coming from a very low position, a very not so good operational position that they've been improving on over the years. So in the case of Zenith now, their own is coming from, when you look at the profit figures, you see that they're coming from about 160 billion as of 9M 2021 to 174 billion. So you will see that in their case, they have a very higher base to deal with in terms of profitability. So all of them are performing fine. And then, of course, there is still room for improvement. The rising yield environment, despite the fact that it constitutes increased cost of fund for some of them, but we believe that their books, the structure of their business, I mean the internal structures, both significantly fine for some of them, which means despite the rising yield environment, they will still be able to post better net interest income position. But don't look at these businesses like, okay, this one grew 125% in profit after tax. Look at them, contextualize the profit, and then you will get that all of them are actually doing well, considering the numerous issues, numerous regulatory issues that they are having to face, and the macroeconomic environment that's not in the real sense very positive for every business now.
Okay, so talk to us about flour mills. That's the consumer goods sector now. We see Nigerian breweries posted, flour mills not so good. Talk to us about flour mills and their performance this quarter for the half year of 2023.
Yeah, the point is for the likes of flour mills, right? Flour mills continues to grow top line, which is a very important thing to note. And then when you look at profit after tax, you will see that it's slowed down. It makes sense that it slows down, and I will tell you why. Particularly being a sector that I have so much interest in, one of the major issues, one of the major encumbrances globally, particularly for business, is energy cost. And in their case, it has not changed. Don't also forget that earlier in the year, we were on this call, and I said to you that the rising commodity prices will significantly impair their gross profit position. And when all of these kind of value eroding activities takes place, we would expect that things will slow down. Hence, you can see profit margin slow down from about 2.0% to 1.1%. So overall, for flour mills and for most other businesses in that segment, even Honeywell, I mean, you will recollect, we were talking about a loss position as of the time they released their Q1 position. It's still pretty much the same. The fact is energy costs, rising commodity prices, amongst other things, continues to be a deterrent in the bid of these businesses to optimize value for shareholders. But we should at least, most importantly, look at this kind of business now, for instance, let's say flour mills now in this case, and see that they are still able to cost to profit position despite the numerous headwinds they are having to face. It's a tough environment out there, and anyone that's able to sail the coast at this level of turbulence, I mean, they are really putting in a lot of effort there.
We'll slide into the industrial goods now. When we saw Dangote Cement, was expecting a lot more from Dangote Cement, but what I'm seeing now in terms of the profit margin, it fell in the Q3, that's the third quarter of 2022. But we see Boa Cement outperforming here. Both of them are the same sector. I would say that they are facing almost similar challenges. What would you say in this regard, or in this case, is the matter or the problem or the issue with Dangote Cement? Why did they underperform?
Yeah, very importantly, when you look at the industrial goods segment, you will understand by merely looking at the figure that, for instance, look at the revenue for Dangote Cement. You can see them playing in the region of trillions. And then you will see Bua for one, for instance, playing in the billion region. The case is more or less of the market is not particularly growing like you would expect it to grow. One, of course, you will see growth posted. Bua 40.5%, Dangote Cement about 15.2%, but this growth is not at the level you would expect. Miss that with the headwind we cited when we were talking about the consumer firms earlier, and then you will get the reality that the tight economic environment, the not so favorable external conditions, how that spills over into commodities prices, energy costs, and also the activities of the numerous monetary authorities. And in our case, it is not different here in Nigeria, whereby you see MPRI consistently with the intention of combing some extra layer of concerns that may constitute inflationary pressure, makes difficulty. Look at the Q2 figure as well. It will point you to the fact that construction activity is slowing. It's not like it was in 2021 again. And then you look at the real estate activities as well. Things are slowing generally. So pretty much when that comes back to haunt these businesses in one way or the other, we should not particularly take it, I mean, we should note it accordingly. In this case, it's more or less like Dangote is playing at a much higher scale. It makes sense. And then when you see Bua, they are more or less like after the strategic investment they made late 2019 and early late 2019 and early 2020, when you combine that and the fact that they are now spreading their tentacles, doing a lot in terms of cost management as well, it makes sense to note why their case is different. So overall, I think Dangote Cement is a victim of its own success currently, and the economic environment is contributing a great deal to that.
Definitely, the economic environment is really harsh for companies right now. But we'll take a quick break, and when we return, the central bank's new banknotes and how that impacts the capital market next. Do stay with us. This is Capital Markets. Welcome back. On Wednesday, the governor of the Central Bank of Nigeria, Mr. Godwin Emefiele, held a special press briefing where he announced the redesigning of the Naira. He added that circulation of the new banknotes begins mid-December and old notes become invalid on January the 1st next year. Now, the governor also gave reasons for this action. Let's take a quick listen to what he has to say.
The integrity of a local legal tender, the efficiency of its supply, as well as its efficacy in the conduct of monetary policy are some of the hallmarks of a great central bank. In recent times, however, currency management has faced several daunting challenges that have continued to escalate in scale and sophistication, with attendant and unintended consequences for the integrity of both the CBN and the country at large. Mandate as enshrined in Section 2B of the CBN Act of 2007 to ensure a strong and effective legal tender. It is therefore no longer tenable to continue with business as usual, especially given the continually evolving circumstances that would impeach the optimal performance of our Naira. Furthermore, we believe that the redesign of the currency will help deepen our drive to entrench cashless economy, as it will be complemented by increased minting of our e-Naira. This will further rein in the currency outside the banking system into the banking system, thereby making monetary policy more efficacious.
That was the central bank governor, Mr. Godwin Emefiele, during the briefing. Now, Ayodeji Ajilore is still with me here. And Ayodeji, in the governor's press briefing, the governor cited that over 80% of the currency in circulation is outside the vaults of the commercial bank. That's about 3.23 trillion naira. And he also stated that there's an increase in currency counterfeiting and increased shortages of clean and fit banknotes. Now, are these reasons enough for a complete overhaul of the Naira, in your opinion?
Yeah, thank you. I mean, having observed the pros and the cons in this case, of course, looking at the cost and then, of course, the attendant benefit, we internally here believe it's a right policy direction at this moment. Of course, it doesn't mean that the anomaly, which is the excessiveness of the note, that, I mean, the huge notes being outside the banking system is not new particularly. But the point that we must note is a problem persisting for long is not a justification for identifying it at a point and then, of course, trying everything possible to nip it in the bud. From his statement, he said about 85% of the currency in circulation outside the banking system. Indirectly, these are one of the reasons, or perhaps I should say, this is one of the reasons why the financial inclusion objective of the federal government seem to be outside our reach every time we are trying. Because when you look at it as a matter of fact, right, if there is incentive particularly, I mean, if there are ways, if there are, let me say, leakages in the system that permits this excessive amount of notes outside the banking system, right, that pretty much is enough incentive for anyone who is willing not to bank. So overall, right, the point is, yeah, it might come at a point when perhaps a lot of bodies or perhaps a lot of people might no longer believe in the policy trust of the CBN again. But the point is, we should assess this holistically, and that was what exactly we did here. So when we look at it, for instance, and you say about 85% of currency not outside the banking system, we think one of the things that this could have enabled in time past, like I said earlier, is to allow more people to be financially excluded. Of course, we've done some gains in terms of financial inclusion objective here, but the point is, what about the kind of vices this could easily enable? I mean, look at it, for instance, if you can keep 2.7 trillion outside of the banking system, out of a note of 3.2 trillion, look at what has been happening across the country. Look at terrorism financing, look at kidnapping activities. Look at how that informal sector that has such notes within its purview is able to use, it's able to function effectively. And another angle that we have also looked at is, if such amount of money is in the banking system, the goal of the CBN, which we have identified recently, which is one of the things they communicated after the May meeting where they did the first interest rate hike in a while. One of the goals they mentioned is the fact that they wanted to nip in the bud the incessant rise in price level in the economy. Yes, this is not to say that the rise in prices is particularly a demand side issue. Of course, we know that there is a supply side angle to it, especially exacerbated by the external condition after the since the commencement of the Ukraine and Russia conflict in Eastern Europe. But the point still remains that if we allow, in the run-up to an election year, where we know that politicians, for one, might want to use cash, right, to do some corrupt election practices, right? If we allow such funds to come into the system and add to the current issues, which we have identified as supply side issues, prices might just run out of reach completely, and then it will be a very big issue to contend with within the Nigerian space. It's not like things are really that good now. So it makes sense that the CBN, which is the monetary authority in this case, rein in on anything that could further exacerbate that position. So that's why we think, look at the opportunity cost of this. Look at the cost it will take to redesign new note. Look at the likely implication of this action. Some people have said, what will it profit us if these people go about, and then the people who currently stash the money outside the banking system, what would happen if they go about buying foreign exchange with it?
Yeah,
pretty
that's
much
true.
It's an argument.
I just want to know how it would impact the capital market, especially for bonds and the fixed income space. How do you think this decision by the central bank will impact the money markets? Do you think it's going to be favorable for the money markets, or in the near term, or detrimental to it in the long term?
Actually, doing our own testing of the scenario that could probably happen here, we think, of course, it will impact in one way, because money in the banking system means money in the capital market, directly or indirectly. But the point is, don't forget that every 100 naira that comes into the banking system now, 35 naira of that is going in Sierra to the CBN. So it's pretty much more or less like the banks will have to make do with the remaining 65 naira. And one very important thing that we have also noted is that aside this particular action, the CBN might need to go a little step further to disincentivize cash withdrawals. Because the point is, like I said, over 20 years, we've seen data that point to the fact that we've always had huge amount of cash outside the banking system. So what we are saying in essence is, now that we are reining in this, we should as well put in a kind of patch, so much that the leakages will be forestalled for future purpose, so much that if there is going to be any note in the system, it will just be a little relative to what we currently have. And then you ask, how will it affect the capital market? I think it means perhaps more money chasing money market instruments, particularly when you look at the fact that banks do a lot in treasury bill buying. When money comes into the system.
When you say more money chasing money market instruments, that means there's going to be a drop in yields. Is that not the effect of that?
Yeah, we expect, if the lump is able to come in significantly at once, we would expect that will shape that direction of yield for quite a while. But of course, we think the overall trajectory of things still points towards the upside, particularly when you look at the fact that inflation is still yet to abate. And then when you look at the fact that the CBN, from their current positioning, will still continue to do things, particularly make capital inflow a target and then, of course, to ensure that inflation is nipped in the bud. Don't forget, that concern of inflation is also one of the reasons why we are saying, let's add more of the notes in the system. Let's find a way to also use that opportunity to clean out old and dirty notes, and then, of course, to limit currency counterfeiting, particularly in this case. And I mean, that's okay.
So, DG Ajilore, many thanks for sharing your thoughts on the program, and we hope that this pans out for the better for the economy, especially with the high inflation that we are facing now. Ayodeji Ajilore, investment professional, ARM Securities Limited, many thanks for your time on the program.
You're welcome. Thank you.
And that's it on Capital Market. Do join us same time next week for another edition. I'm Will Ibang. Thanks for watching.